Toronto home sales in February fell to the lowest level over the past year as affordability challenges and economic uncertainty weighed on buyers. Let's bring in Jason Mercer. He's Chief Market Strategist at the Toronto Regional Real Estate Board. Jason, thanks a lot for joining us. Let's talk about, first of all, something that TREB says in its release, and that's that the tariff situation is causing would-be homeowners in Toronto to defer their decision. Talk to us about that.
Yeah, at the end of last year and beginning of this year, looking at polling we've had done by Ipsos on behalf of the Toronto Regional Real Estate Board, a couple of things come out that sort of inform what we saw in February. Number one, there's a lot of would-be home buyers that still need to see further relief on the interest rate front. That's in the offing, so we expect to see the situation become more affordable in the coming months as we move through the spring. But on top of that, if you're considering purchasing a home right now and are sort of trying to wade through the uncertainty that exists in the labor market today and the overall economy today vis-a-vis this trade dispute, you may be putting that decision to purchase on hold as well.
And this trade situation could endure for quite some time. What are your thoughts on how long this cloud could hang over the Toronto housing market if the negative headlines on tariffs persist?
Yeah, it's interesting, and there's never sort of a perfect comparator back in time for these types of shocks. But if you look at the pandemic, for example, back in 2020, I mean, obviously that was a period of serious uncertainty. People were locked down in their homes for a number of months, by and large. Yet at the same time, as we saw monetary policy respond and much lower borrowing costs, we saw the housing market turn around quite quickly. So it is possible, whether we have a resolution to this trade dispute, or we see both physical and monetary measures to try to mitigate the impact of that dispute. It is possible that we see a bit of a year or two halves, if you were, where we're sort of treading water in a period of uncertainty in the first half, and perhaps start to see more of a pickup in the second half of 2025.
TREB is never shy or reluctant to articulate its views on what governments could be doing to improve affordability in Canada. One thing TREB says today, that with a provincial election in Ontario in the immediate past and a federal election coming quite possibly before too long, one thing policymakers need to focus on is our trading issues with the United States, correct?
Yeah, for sure. I mean, that's a major issue when you're thinking about people's overall confidence of their ability to purchase and pay for a home over the long term through the use of a mortgage. It's also important to think about what policies could be put in place that kind of ease the affordability burden, for would-be home buyers. It's important to remember that on average, every sale that's reported through TREB's MLS system results in about $70,000 worth of additional spin-off expenditures. And so we're talking about billions of dollars, either to the upside or the downside, when we're seeing the housing market being impacted by external factors. Okay.
Would-be home buyers would like to see prices move down, and indeed they did in the most recent period, the period reported in the February period. The average selling price $1.08 million, down about 2% from a year earlier. What kind of trend are we seeing in prices? What kind of multi-month trend have we seen on prices?
Yeah, I mean, I think if you segmentize the market, on the one hand, and on the low-rise sort of single-family side, we've seen more competition between buyers in some neighborhoods throughout the Greater Toronto area. On the condo front, that's a very well-supplied segment. And so if we think about the demand for housing moving forward, especially as interest rates trend lower, think about first-time buyers moving out of rental accommodation into the condominium apartment market. They're going to benefit both from lower borrowing costs in the months ahead, but they're also going to continue to benefit from a lot of choice, a lot of inventory, and obviously that helps from a negotiating perspective.
What is happening to the city's or the region's condominium market? The headlines seem very, very negative there. It sounds like a good time for first-time buyers to make their first condo purchase.
Yeah, I mean, if you think about the correlation between conditions in the resale market, so looking at sales versus the new listings and what we see in terms of new home sales, that goes a long way to explaining why, we haven't seen a lot of sales center activity. There's a ton of choice in the resale market, so not a lot of people are saying, look, I'm going to sacrifice some time to purchase a home off of plans for delivery down the road. And you're right, whether we're talking about first-time buyers or move-down buyers looking to purchase a resale condominium apartment, there's a lot of choice out there right now, and that can help with affordability.
Do you have any price examples that you might be able to offer us? What might a two-bedroom condo be going for now?
Well, look, I mean, somewhere between $600,000 and $800,000 is in a lot of cases where you're going to find sort of that one bedroom or two bedroom product. But I'd argue today, the level of negotiating power can even depend on sort of a building by building basis in terms of where supply is coming online.
And do you see those trends in the condo market persisting?
Well, I think, I mean, there's a lot of units, remaining in the pipeline. And so I think the real question is going to be, especially as we move into the second half of 25 and even more so into 26, sort of what the absorption rate is. I mean, if we start to see a pickup in first-time buying activity on the back of a lower borrowing costs, then we'll be absorbing that supply much more quickly. Obviously, if we see a bit of a stall in terms of demand because of, external factors, then it's possible we could also see a buildup in inventory.
The fixed income market now sees an 84% chance, according to my Bloomberg screen right now, of a Bank of Canada rate cut on March the 12th, and is pricing in about 3 more cuts in 2025. To what degree are would-be buyers waiting for those cuts to happen before they make their decisions?
Yeah, I mean, I think both buyers and sellers have been hanging on, sort of anticipating, a much lower interest rate environment, which would obviously improve affordability as we move towards the late spring. And that's another reason why I've sort of spoken about a year or two halves. Like, notwithstanding the issues from a trade perspective, we always thought that we were going to see a more affordable housing market situation in the second half of this year, and so that's where we're expecting to see more in the way of transactions being reported through our system.
Jason, thank you as always. Jason Mercer, Chief Market Analyst.